Family Wealth Planning Partners. I'm Brian Ramsey, and this is week 4 of a multi-part series we're doing around the topic of the most common financial mistakes we see clients make. This week we're talking about not knowing what your risk profile is, or more importantly, what your risk profile should be. Now, what we're talking about risk, we're talking about when you invest money in, name any widget, there is the possibility of losing your money. And that's really what we're talking about when we're talking about risk. And so first of all, let's talk about what your risk profile is. Some clients know, some clients don't know, but what we often find is clients solely focus on what their risk profile is when it comes to their investment accounts, meaning 401k, IRA, Roth IRA, non-qualified account. But we often have clients that have outside investments other than those accounts, meaning they might have investments in real estate, or they might have investments in a particular business, or interest in a business holding, or they might be a business owner, and really that's their biggest, riskiest asset is their company. And so what we want to identify, first of all, is what their current risk profile is. And so we look at all their individual holdings, but when it comes to the risk in their investment accounts, that's where clients seem to focus most of their attention. And we ask, how did you determine how to invest your assets at the time? And they say, hey, I either took a 12-question questionnaire and determined what my risk is, or really I just invested the assets according to how I feel about the market and how much, let's say, exposure I wanted to the equity market. And so that's pretty easy to determine once we look at the global investment picture. Now, yes, do we get into the weeds of investing, what your risk profile is, let's say in your Roth IRA versus your non-qualified account versus your Roth or your IRA? Yes, we get that in depth, but for this topic, we're just saying global allocation. So I would think most clients can easily identify, working with a professional or they've done it on their own, what their overall risk profile is. But the most important question is what their risk profile should be. Now, let me talk about that. What we often find is clients that have gone through the planning process have, with a pretty good degree of certainty, identified what their overall risk should be. And that's the proper way to do it. Yes, is it okay if you went out and answered a 12-question questionnaire and it says you're let's say a moderate investor and you have your assets invested that way? Sure, that's okay. But the proper way to do it, and the way we work with clients, is we go through the planning process, and the plan identifies what your global allocation or your global risk profile should be. And then we look at what your overall investments are and determine how those assets need to be invested. So there is a methodology behind it. It's not a guessing game. It's not how you feel about the market. There's actually numbers behind it that support what your allocation should be. Now, I'll give you an example. We have clients come in all the time that say, hey, I just don't like the market. I'm very risk averse. And when we do their overall plan, they don't have enough risk exposure, or their assets are not going to appreciate at a fast enough rate in order to meet their financial goals when they retire. On the other hand, we have clients that come in that when we look at their investment statements or look at their global investment allocation, they are way aggressive. And when we do their plan, we determine that they don't need anywhere near that type of risk, and so we can have, or we feel with a pretty good degree of confidence that we can dial back some of the risk. And so it's very important to understand what your overall risk is, but I will tell you it's more important to understand what your risk should be. And that's where doing a financial plan will give you a pretty good degree of certainty what your asset allocation or what your risk profile should be. And that's the way we do it here. That's the way we feel is the best way to do it. If you've got questions about your risk profile, or you want more information on how to determine what your risk profile is, or you just got questions about your current situation, feel free to give us a call. You can come in to meet us. And if you want to sign up for our blogs every week, just go to our blog page, and there's a place you can sign up to receive our weekly blogs. We'd encourage you to do that, because every week we come out with a different topic. So that's it for this week. Tune in next week. We're going to tackle another edition of the most common financial mistakes we see clients make. Have a good week. Hi, thank you so much for watching our blog series. We really appreciate it. If you like the content that we're producing, just make sure you give us a big old thumbs up. If you want to subscribe to our channel, make sure you get the weekly blog. Just hit the subscribe button below. And if you like the content, make sure you share it. We would greatly appreciate it. Thanks a lot.